Boa noite, boa noite, boa noite, boa noite! Boa noite! Se venda no Dow, eu tô vendendo no Dow e comprado aí no ouro, até o talo, menino! É isso aí, galera! Vamos vender o Dow e comprar o ouro! Vamos ganhar din-din! Quem quer dinheiro? Já estamos socando ela porrete logo cedo, menino! Sim, ela porrete! Aqui faz dinheiro, hein, menino? Aqui faz dinheiro de dia, de noite, de tarde, de madrugada, qualquer horário. Comprado aí no ouro e vendido no Dow, logo na abertura. Até o talo, menino. Dá o talo. Que faz dinheiro, moleque. É. Aí o Dow derretendo aí, ó. Olha a pancadaria besta aí. Vai longe, menino. Ó o alvo aqui, ó. 28.069. Aí o ouro. O ouro vai voltar tudinho. O alvo do ouro aí, quem comprou comigo é no 59. 14,59. Vambora. Segue a operação do Além. Quem é que pegou essa operação aí do Além? Logo assim na abertura. Aê, Alexandre. Rasgando aí, menino. Vendendo tudo no Dow aí. Vendi até o talo. E aí comprei o ouro aí na abertura. Japão deu uma porretada para baixo, menino. Por isso que o Dow veio. E vai vir mais. O Japão aí tá querendo derreter, cara. Venda no Dow. Quem não entrou, tá com o dedo na venda aí. Quem não comprou ouro, compra o ouro. Vai embora. Até dá uma dor. Aí, derretimento, já já. E vai mais. Vambora, pessoal, vambora. Tá no burrinho só com a espora, menino. Olha aí, derretimento total, glacial. Ih! Quem é que tá comigo aí na operaçãozinha aí? Derretimento total. Total. Derretimento total. Esse aqui vai ser rápido, hein? Essa operação aí. Aí, o ouro aí. O Dow. Olha que pancada que estão dando no Dow aí. Isso é sinal que o dólar vai espocar lá de novo, né, cara? Amanhã. Olha. Cada marretada, menino. Só uma porrada dessa assim, ó. Logo na abertura agora, ó. Tanto no ouro como no Dow. Isso aqui não volta não, tá? Isso aqui já é posição de grandes players aí. Pra passar a noite toda, a madrugada toda e a manhã toda. Amanhã o dia inteiro também. Já fica com o preço lá pra baixo. Fundamento aí craniano, hein? Vai embora. O Japão tá no derretimento total ali.
On the Bloomberg, of course, we know that the USMCA negotiations continue in Washington, and we've just heard from the Canadian Deputy Prime Minister, Chrystia Freeland, saying that she had a good discussion on the USMCA deal, that good work is being done, and she's in Washington to get this USMCA trade negotiation across the finish line. Still, we haven't seen any concrete evidence that USMCA has been agreed on. The negotiations, as it seems, continue. Of course, we have seen some more optimism across the board, whether it's on trade between China and the US, as well as the USMCA deal. So we saw US stocks continuing their run in the regular session, hitting another new high despite the low volume. Of course, it's Thanksgiving week. However, we do have US futures at the moment falling 0.25% after we've heard that the president has signed that Hong Kong Human Rights and Democracy Act backing the protesters in Hong Kong. Joining us now to discuss all of this this is Region Atlantic Partner and Director of Research, Catherine. Andy, great to have you here. We were just saying that really not a quiet day, despite this low volume Thanksgiving week. So how will the markets perceive this, given that we are not getting any certainty on the USMCA as of yet, and it seems we have more hurdles for the US-China trade deal?
So I think the way that the markets will perceive this is negatively. So think about what's happened over the past few weeks. We've seen a really big rally in risk assets in response to two things. The first one is likely to be sustained, which is that the risk of a recession has really gotten derated over the past few weeks. It looks like the Fed engineered a soft landing here in the U.S. Germany avoided a technical recession by just a hair. All these things are good news. Here's the bad news. The bad news is the trade war is still on. And I think it's still on for a couple of reasons. And the biggest reason is 2020 is going to be a big political year here in the U.S. It's going to be the presidential election. In this cycle, there's just about one thing that everybody agrees on, and it is that trade is important and that China is exceedingly unpopular on both sides of the political aisle. You see how easy this Hong Kong bill went through Congress. You see how quickly it was signed. This is more posturing than substance. The substance is going to be trade. Apart from a handful of wins on, say, poultry imports into China, I really don't see substantial progress on trade with China, with Europe, with the potential exception of USMCA. Why? Because the deal has already been agreed to in principle.
Right.
We just have to ink it.
So what does this do then to the U.S. market outperformance that we've been seeing so far? This GTV chart on the Bloomberg showing that this has really been the long-term trend between S&P 500 against the rest of the world, right? So where are we headed in 2020? Will this continue?
I doubt it will continue. So why has the S&P 500 outperformed all other assets for so long, for so many years in a row? Part of it is driven by better fundamental growth, so better performance on the earnings front. Part of it is driven by better valuations, meaning higher valuations. Let's talk about the fundamental front first. What has enabled U.S. companies to achieve better growth is partially legislative. We've had a very substantial tax cut to previously near world highs on corporate income taxes. That's not going to happen again. In fact, if anything, politics may drive those back
who knows?
higher.
We're heading into 2020, right?
Yeah, we'll have to see. I really don't want to make political predictions too early into the cycle. The other thing that's kept U.S. profits growing faster than the rest of the world is monopoly privilege. The U.S. was first to market with a number of companies that are really, really important to the modern economy. Google is the killer app of search engines. Facebook is the killer app of social networking. Amazon is the killer app, at least in the Western world, of online shopping. And all these companies exercise their privilege as a monopolist to earn excess profits. You can see it in their profit margins. You can see it in how they perform. And yet that's starting to get challenged. Just over the past few months, we've seen a new regulatory watchdog in Europe become really rambunctious about how they want to approach this. We've seen more legislative hearings, which may lead to more legislative action to curb this privilege. What does this mean? It means that the U.S. will not be an outlier anymore for earnings growth. If anything, we might stand out as an outlier for lack of that growth.
Andy, to your point on valuations of US stocks, I'll see Sherry's chart and raise you this one. They're getting very, very expensive. A number of analysts we speak to see a correction as being almost inevitable. Is that something you see? Do you think it's maybe time to take some profits?
It is something I see, and here's the biggest way I see it. What has supported these valuations is predominantly the fact that we've achieved much higher earnings growth among the major corporations here in the U.S. relative to the rest of the world. And if that's not going to be sustained, then this delta of valuations is not going to be sustained either. It could also translate into currency values. So the dollar has gone from undervalued 10 years ago to fairly valued to likely overvalued now relative to just about every major trading partner that we have in every other major stock market that's denominated in a different currency. All this can flip, all this can turn in a single year and contribute to pretty substantial outperformance for foreign assets relative to American ones.
Yeah, well, one of the themes earlier this year was all about the yield curve inversion. It's pretty uncool to talk about that now. Was that as a predictor of a recession just maybe a little bit early? There's still potentially one around the corner in 2020?
So I'm not going to take any bets of a recession off the table, but it has become materially less likely, and you can see it in the way that the yield curve has behaved. The yield curve barely dipped into negative territory for a few weeks and has rebounded. You can see it in other economic data. We'll see it more next month when we review the PMIs and see if they've returned to something closer to an expansionary level. We'll see it again in the employment reports that come out early next month too.
All right, Region Atlantic partner and Director of Research, Andy Cameron, thanks so much for joining us.
My pleasure.
The White House is making a pre-Thanksgiving push to wrap up talks on a new North American trade deal, holding meetings with top Mexican and Canadian officials in Washington. Now, this is as the administration and House Democrats managed to narrow their differences on the deal this week. Well, let's get over to Washington and our congressional reporter Eric Watson on the phone. So, Eric, exactly what were the issues and how have they been resolved?
Yeah, I'm standing out here outside the U.S. Trade Representative's office, and a meeting has just wrapped up between USTR Robert Lighthizer, the Canadian counterpart, Deputy Prime Minister Freeland, and Jesus Bennett, the Mexican negotiator. And they have not concluded an agreement this time, but they're saying they're planning to meet again as soon as Friday to try to wrap up the final issues. Democrats in the House of Representatives are pushing for changes to the agreement related to labor rights and enforcement of labor rights. And this needs Mexico and Canada's sign-off because it's going to require changes to the base text of the agreement. So there's a multi-pronged effort underway here for the Trump White House to try to get this on track and get voted on in the House by the end of the year.
Eric, so what exactly are the issues at play at the moment? Because we heard from Nancy Pelosi that this would actually help America's workers.
Well, the idea, the original NAFTA was not really enforceable. There was supposed to be a arbitration panel dispute mechanism put in place, but those panels never met because the accused party of the three could just block the formation of those panels. It looks like that actually is going to be resolved. That loophole is going to be taken out of the agreement. But further than that, U.S. labor unions want labor rights to be enforced by blocking products made in factories not obeying labor laws to be blocked at the border. And that's something that Mexico said it just cannot accept. They also are pushing back against the idea of U.S. inspectors being stationed inside Mexican factories. So that's still on the table as far as Democrats are concerned, but the Mexicans may be pushing to get that to remove from any tentative changes that are being talked about.
So, Eric, even if we do get a deal at this point, what would the congressional timeline look like? Because we don't have much left to the end of the year.
It could be voted on next week, but it could be voted as soon as the week after. But more likely toward the end of December. Congress is now slated to leave around December 20th, so they could leave right after voting on that in the House. The Senate could take it up in January. Complicating all this is the impeachment process. Votes are to take place in the House, and then once that's sent over to the Senate will be bogged down by an impeachment trial for 2 to 6 weeks, they're saying. So that could also complicate passage of the USMCA.
All right, congressional reporter Eric Watson, thanks very much for watching that story for us. Now you get a roundup of the stories that you need to know to get your day going. In today's edition of Daybreak, Bloomberg subscribers go to Daybreak Go on their terminals. This is also available on mobile and the Bloomberg Anywhere app. Customize your settings so you're only getting news on the industries and the assets that you care about. This is Bloomberg.
please, with a smile on your face.
For the diseases have been taken, I'll take a tax.
This is Daybreak Asia. I'm Chevrillon in New York.
And I'm Paul Allen in Sydney. Amazon and eBay are entering the holiday shopping season, fending off reports of quality control issues. Activist groups say beauty products with high mercury levels are being sold on their websites. Let's cross to our tech reporter, Spencer Soper. Spencer, I've got to ask, what is mercury even doing in these products?
That's a good question. They do get into the products, and they're not really policed very well. So that's the whole point of this report from the Sierra Club and other activist groups, is to be mindful, especially if you're using a skin lightening product, that it could be contaminated with mercury.
Does that mean that Amazon has the responsibility to police this?
Well, that's what the groups are saying, and it's difficult for Amazon to just let any kind of dangerous product flow onto its site. It says it has tools available, tries to identify things that are, suspect or potentially risky and block them. But what reports like this showcase for consumers is that stuff always manages to slip through the cracks. And so what they did was they purchased more than 150 products from Amazon, eBay in 12 countries, and they found more than 60% of them, contain dangerous levels of mercury. So it's hard to dismiss as just some freak anomaly.
Spencer, we've also got news that Amazon's on a bit of a hiring spree ahead of the holiday season. What's happening there?
Yeah, so they announced today in an email statement that they're hiring 200,000 seasonal workers in the U.S. This is about twice as many as they hired a year ago. So that just signals they're expecting a very strong shopping season. Everybody keeps wondering when Amazon's going to hit, saturation point, and growth is slow. But this pace of hiring signals that they expect to have plenty of orders this year.
Spencer Soper, thank you. Our tech reporter there joining us from Seattle. Let's now get a quick check of the latest business flash headlines. Farming industry bellwether John Deere fell after delivering a more cautious outlook than expected for the year ahead, as trade tensions and difficult growing conditions keep customers from replacing large demand equipment. Demand for machinery has taken a back seat as trade concerns have farmers worrying about who will buy their products. Construction equipment purchases are also set to decline.
Reports from Hong Kong say Alibaba is on the fast track to the city's main trading index. The South China Morning Post says shares will be included on the Hang Seng Composite on December the 9th. The index has more than 400 members and covers 90% of the capitalization of the exchange. Alibaba made its debut in the city on Tuesday, with the stock rising strongly in each of its first two trading sessions.
Retail shareholders who bought into Westpac's capital raising before it was accused of breaching money laundering laws can ask for their money back. Westpac says that after talking to the regulator, retail investors have until the end of next week to change their minds. Earlier this month, the bank sold the equivalent of $1.3 billion of stock to institutional investors and is seeking more from retail buyers.
All right, let's get a quick check of what's happening on the markets right now. Australia's been trading for about 26 minutes now, so a good chance for all those stocks to come online. Currently higher by 0.25%. It has pulled back a little. We have, of course, had that news from the United States that President Trump has now signed into law those amendments to the Hong Kong Policy Act, so that may cloud the picture on the US and China trade talks. We shall have to just wait and see. But the ASX pulling back some of those early gains, now higher by 0.25%. New Zealand, though, stronger by 1%. Futures for the Nikkei traded out of Chicago and are a little weaker, as are EVs. Okay, let's see what we've got coming up next. We're going to hear why the European Union plans to push for a digital tax, even if a global effort fails. We're going to have an interview with the EU Competition Commissioner, Margrethe Vestager. That's coming up next. This is Bloomberg. This is Daybreak Asia. I'm Paul Allen in Sydney.
And I'm Shemrian in New York. Postal Savings Bank of China is set to IPO on the mainland later Thursday in what's expected to be the nation's biggest listing since 2015, but it may not be plain sailing, with investors losing interest in mainland stocks. China correspondent Tom McKenzie joins us from Beijing. Tom, so a challenging time to be going public in China.
Yeah, absolutely a challenging time, and I'll run you through why. But just for the context, as you say, this would be the largest IPO in theory in China since 2015. Globally, this year it would be the largest, the fourth largest, after the likes of Uber, Alibaba, and Budweiser as well. But in terms of that challenging environment, essentially you've got a lack of enthusiasm from mainland investors as they gear up or look towards this continued economic slowdown here. The trade talks, of course, the twists and turns of those trade talks, and weaker the corporate earnings. So in terms of the turnover that you've seen in mainland markets, it's actually fallen more than 70% since the highs of March early this year. In terms of the stock brokerage openings, in terms of accounts, those have dropped off as well. And in terms of the IPOs that we've had, if you look at the 36 IPOs since the end of October, 7 of those out of the 36 have fallen below their IPO price. So yes, this is a difficult environment in which to list. There is this lack of enthusiasm for the reasons that I outlined. So we're going to have to watch to see how it does. Postal Savings Bank of China, of course, when it does list later today.
Tom, given that lack of enthusiasm, why would investors buy into this IPO?
Well, this is still a bank that has a huge footprint in mainland China. So they have about 40,000 branches across the country. They're growing. They also have about 550 million retail users as well, retail customers. So there's that significant footprint that they have in mainland China. And also, if you look at the stock price in Hong Kong, it's actually up year to date about 25%. So there's some compelling reasons you would argue, or they could argue, to get into this stock. The flip side, of course, is the macro environment, as I alluded to, of course, is very difficult with that economic slowdown. You're seeing, of course, as well, some rate cuts from the PBOC, so maybe a pressure, some pressure on the net interest margins for this bank. That has been a big question as well, more broadly for the banking sector. And then, of course, you've got the officials here, the PBOC, the central bank, pressuring these banks to do their bit to try to lift up the economic growth by ensuring that loans are getting to private companies. That, of course, potentially increases their exposure to risky debt. So all of those question marks, again, will be on the minds of mainland investors when they look at this IPO. Certainly, it could be set for a lukewarm, a tepid reception when it does list.
All right, China correspondent Tom McKenzie in Beijing. Thanks for joining us. Let's check in on the First Word News now with Sue Keenan.
All right, thank you, Paul. We start with a signing by President Trump. Trump has signed a legislation passed by Congress that backs pro-democracy supporters in Hong Kong. The bill requires an annual review of whether the city is sufficiently autonomous from Beijing to justify its special trading status. Trump says he hopes China and Hong Kong can settle their differences, but Beijing had threatened to impose unspecified retaliation if the bill became law. The latest Fed survey of the U.S. economy, meanwhile, shows, quote, modest growth through mid-November with steady consumer spending and some bright spots in manufacturing. The Beige Book strikes a slightly more upbeat tone than it did in October and affirms the Fed's general outlook for moderate expansion. It says more regions reported growth this month than last, although the majority saw none at all. And U.S. private equity firm Silver Lake Management is buying just over 10% of English Premier League soccer champions Manchester City for around $500 million. The deal puts City Football Group among the highest valued professional sports organizations. The deal boosted shares of City's crosstown rival Manchester United, which jumped more than 10% in New York trading. And Sterling strengthened as a YouGov poll suggested the Conservative Party may win a comfortable majority in next month's UK election. The survey of 50,000 voters sees the Tories winning 359 seats to Labour's 211. However, a top aide to UK Prime Minister Boris Johnson is warning there may be a hung parliament. Dominic Cummings says there's a very real chance of no overall victory and that things are much tighter than they seem. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan, this is Bloomberg.
And on that YouGov poll on the UK elections, we saw the results actually affect the British pound, you can see that it really jumped against the US dollar to a one-week high. It's in fact up against all G10 peers when it comes to the sterling against the euro and the Japanese yen. Also, the pound at a 6-month high. So we can see that swift reaction in the currency markets on that news that the Conservatives are expected to win a majority in the December election. Now, the European Union still plans to pursue a digital tax, even if a global push at the OECD fails. Competition Commissioner Margaret Vestager spoke to Bloomberg about the need for the bloc to be much more assertive on the global tech stage.
First and foremost, of course, to promote what we have going for ourselves already, because in the business-to-business environment, you find a lot of impressive tech. You find engineers, you find research, and you find an impressive startup environment. And of course, then the willingness to balance all the possibilities and to tame the downsides.
And you're talking about innovation, but we do hear many times from U.S. companies that the reason why you're so focused on taxation is because we haven't really seen any real innovation in Europe. Do you agree with that? Is that fair?
No, that's absolutely not fair. What is fair is to say to all the many, many businesses who pay their taxes in Europe that not just some of them should contribute, but that every company should contribute where they do excellent business, because that's just the bottom line in Europe. You do very good business here.
And what would that be? Is that something that you would still think if by the end of 2020 there is no international agreement on digital taxation, it'd be fair for the EU to just go at it alone?
Yes, of course it would. We are strong believers in a global agreement. I'm very happy to see the progress made by the OECD. There's a very strong push, and there's a positive feedback on their first draft. So of course that would be the better solution, but if that cannot be, well, when you look at all the businesses who pay their taxes, it would only be fair that we pick it up again if a global solution is not possible.
So based on what you hear now from the OECD, this time there is momentum to get this done, because we've been here many times and we haven't actually seen progress made.
Yeah, but I think normally I wouldn't be sort of optimistic when it comes to taxation, but I think now actually there is a momentum, there is a deeper understanding that we have to update sort of also corporate taxation to digital times. And in that respect, I think sort of also the global dialogue is changing.
And we also heard today from President von der Leyen that data is key for this commission. Data is power, but it can also be weaponized. So what are you going to do about it? What measures to protect consumer data in Europe, and how are you going to deal with that?
Well, first and foremost, we're going to make a comprehensive strategy, because for AI, obviously, data is the main input. But data is so much more than a commodity. It's also what defines us as people in digital ages. We have taken a number of steps with sort of digital citizens' rights in the GDPR. We have a lot of public data that has been made available, but what we need is, of course, a comprehensive strategy for data to be the driving force, also of a prosperous European economy, and, of course, for the green transition.
And what timeline are you looking at?
Well, this has to be fast, because it ties in very well with what we are planning to do on artificial intelligence. And the two things will have to come together. But for people to see sort of the full scope of what data can do, well, then we have to make a specific strategy when it comes to data.
And mergers and acquisitions, that was a big theme for the old commission. I know you specifically said you disagreed with a few of them and you blocked the Amston Seaman. That led to criticism. With the new commission, are we going to see a change in the rules to perhaps make it easier to create big European champions?
Well, it is quite easy already. You know, we have giants that comes from mergers here, and the vast majority, they are just, approved because we see no competition concerns. We don't question the business logic. It is so rare that this happens. And actually, the example that we have been discussing, well, they are not the prime examples. Actually, what we want to do more is to make sure that when it comes to data, that you cannot just acquire access to data that you would otherwise not be able to have if that causes a problem for competition.
EU Competition Commissioner Margaret Vestager. Coming up next, Japan's October retail sales numbers due in just a few minutes will assess the typhoon hit and the impact from the sales tax hike. This is Bloomberg.
Just to get you across an alert on the Bloomberg terminal at the moment, Mexico's Deputy Foreign Minister Jesus Ciade has been making some remarks about the progress of the USMCA. There has, of course, been some encouraging news on that today. It appears that US-Mexico-Canada deal may progress through the Congress in the next couple of weeks. So the Deputy Foreign Minister for Mexico, Jesus Ciade, saying that they will meet with Canada on Friday to move the USMCA forward. And he earlier made the remarks that every issue that was causing him to lose sleep is now off the table. So the USMCA appearing to make some good progress there. Okay, let's turn now to retail sales in Japan, which we're expecting in a few moments to see falling sharply in the month of October, and this is after we saw the implementation of the sales tax hike. Now, to join us now with more as we await this, we have Nobuko Kobayashi of EY Parthenon. She's a partner there. Nobuko, as we wait for these numbers to drop, I just want to draw your attention to this chart that we have on the Bloomberg terminal. It shows the effect of front-loading effectively. The last time the sales tax was implemented back in 2014, we saw a big spike in retail sales followed by a pretty steep drop-off. Are we expecting to see the same thing this time?
Well, this time the consensus is the impact from the tax hike is going to be moderate and muted compared to the last time. So the impact on the quarterly GDP right after the sales tax hike, which was a sharp 7% downturn last time, the estimate now this time is going to be 1 to 3% on a quarterly year-over-year downturn. And this is due to a couple of reasons. One is that the sales tax hike increment this time is 2 points as opposed to 3 points last time, so it's more moderate. And in addition, the government has rolled out a number of impact mitigation measures to offset the burden on consumer spend. So how are we reacting? Well, it seems that the people are getting adjusted to the new realities. So after October 1st, actually the consumer confidence index in October was slightly up from September, reversing the downward trend which lasted over 2 years. So this gives basis to the government assessment of the status of the economy. Earlier this month that was announced that the economy is in still slow recovery. That said, there are some worrying signs, the early indicators that the decline may be sharper than expected.
Yeah, slow recovery is really the operative word here. I just have another chart here on the Bloomberg terminal that illustrates just how slow that has been. If we look at the broad sweep of history, retail sales are not even really back to where they were since back in the early 1990s. So are we looking at a much longer-term structural problem here that I suggest may be linked to demographics?
Yes, demographic is one reason, and slow and persistent deflation has plugged Japan over the 3 decades. Abenomics was one attempt to get us out of that downward spiral, but it's still work in progress and on many fronts. Of course, the aging demographics, which leads to rise in social security costs, weigh on people's anxiety. And on top of that, the slowing global economy that we see around us is pulling down the economy domestically as well. So the corporate earnings hurt, the export is down year over year. October saw numbers 10% down. So this is all weighing down. The bright spot of the Japanese economy has been that the labor market has been very, very strong because of the labor shortage caused by the aging society. But at the same time, we see some saturation in the labor market as well. The job-to-applicant ratio actually peaked in the first half. So there are some dark clouds ahead.
Yeah, we have an update on those numbers on this Friday coming up on the job market in Japan. But as you mentioned earlier, we do have resilience in the retail sector, right? That's what we've seen so far. So why are those early indicators that you mentioned earlier, like new cars and home appliances purchases, being slowing down?
Well, I think several hypotheses here. One is definitely the backlash of the front loading of purchase because of the consumption tax hike. But the other direct
that the October was hit with a number of natural disasters in Japan, including a big typhoon. So that may have pulled down the number artificially in October.
So then, what does this mean for going forward? How long can we expect those retail numbers to stay in contraction?
Well, that is the question. If you look back on 2014, the contraction after the tax hike, monthly consumer spend was 5% down the first month, 8% down the second month, and 3% down the third month. So how does it compare this time to that? It's probably going to be more muted because of the reasons I stated. But how deep that is and how prolonged that dip is going to be is yet to be seen.
There were, of course, a couple of other extraneous factors in the month of October besides the sales tax increase. There was, of course, a very severe typhoon. And despite the influx of rugby fans for the World Cup, tourism numbers declined as well. Are you expecting to see much of an impact there?
Yeah, the tourist number is pretty much, very much driven by the economies in China and also Korea, and also the bilateral relationships that Japan has with these countries. So Korea's situation, for instance, has been very, very bad over a year already, and then we see a dramatic decrease in the number of Korean tourists coming into Japan. So it is much tied to these environments, political environments, as well as economies of these nations.
Will we see a boost come 2020 when we have the Tokyo Olympics?
There is a boost and there is a possibility of a cliff. So the Olympic cliff, which is a contraction right after the Olympics of a consumer appetite and also business appetite to spend and make a capital investment. So how deep would that be is still to be estimated. But these are all the worrisome reasons why the government is now planning a package of fiscal stimulus the size of 10 trillion yen to prevent the economy from falling apart in 2020.
Are we going to see more mitigation measures of the tax hike coming from the government, or has everything been done so far?
Well, everything that was planned is being rolled out, and I don't see any new measures coming to be introduced. That said, some of the measures that's already been planned and announced is going to have a more of a late effect in taking impact, in having the impact. For instance, the childcare support for the young families, how that would translate into more of a consumption boost, that is yet to unfold. But there are negative factors as well, such as the expiration of the point reimbursement system. That is one of the mitigation levers, but that would expire at the end of June next year. So that is going to go away. So there is a mixed bag of negative and positive still coming.
Right. Nobuko Kobayashi, thank you, of the EY Parthenon there. And we do have those Japan retail numbers. Retail sales year on year falling 7.1%, which is a steeper fall than the 3.8% that analysts had expected, and of course is a reversal from that gain of 9.1%. But as Nobuko was telling us, this of course has to do with the sales tax hike that we had the previous month, rising October 1st. So there was a lot of front loading for the month of September. So coming after that, now retail sales year on year falling 7.1%, still a much deeper decline than expected. Month on month also falling in the double digits, 14.4%, much bigger fall than what was expected, and of course also a reversal from the gains that we saw in the previous month. There's a sales hike impact there, and also the typhoon Hagibis is also playing a fairly big role in depressing that October spending and sentiment. And of course, don't forget, if you're away from a screen, you can always find in-depth analysis and the day's big newsmakers on Bloomberg Radio, now broadcasting live from our brand new studio in Hong Kong. Listen via the app, Bloomberg Radio Plus, or BloombergRadio.com. This is Bloomberg.
Our top stories this morning in D.C. and
Shall we? So the euro on a 7-day.
sizable moves in the currency market, which is down half.
We begin in the oil patch. Saudi Arabia.
Pretty much unchanged.
Welcome to Bloomberg, the first word Asia week.
US and Japan took it out over exchange rates.
Monthly onshore bond market.
This is Daybreak Asia. I'm Sherian in New York.
And I'm Paul Allen in Sydney. Incoming European Commission President Ursula von der Leyen has made climate change a #1 priority. She spoke to Bloomberg in Strasbourg about working more closely with European businesses on tackling the issue.
I think it is a must for all of us because we know that climate change is existential. But there is a huge opportunity in it too, because at the moment being we are Europe's front runner in fighting climate change and new technologies and green financing. We have 40% of all the patents of renewable energies worldwide. So if we do well, it's not only good for the planet, it's not only good for the people, but it will also be good for the European economy because we will be the exporter of knowledge, of technologies, and we'll be the front runner then.
And when you look at the friction that we've seen between Germany and France over NATO, Emmanuel Macron said it was brain dead, Angela Merkel said it was too drastic. As the head of the European Commission, do you see a bigger role for the EU within NATO, or do you actually believe maybe it's time to consider a bigger European army?
Well, NATO will always be collective defense, Article 5, without any question, and NATO is the strongest military alliance in the world. The European Union has a different role. Of course, we have many European member states that are also members in NATO alliance. And as Europeans, I see fields where we do not need NATO, but the European Union is called upon. And for example, if you remember 5 years ago in Mali, the European Union had the will to answer the crisis and to fight terror, but neither the procedures nor the structures. Therefore, we're building up the European Defence Union since 3 years, knowing that it will be complementary to NATO, but it's for cases where we need the European Union with this huge toolbox we have, from development investment to diplomacy to servicemen and servicewomen, so that we are able to act when called upon.
Incoming EU Commission President Ursula von der Leyen. Let's get a quick check of the latest business flash headlines. Xiaomi reported mixed results in the third quarter with profit rising but still missing expectations. Net income rose 1% thanks to expansion overseas and the move into online services, which helped offset slow smartphone sales. Profit through September was $360 million, fractionally below forecasts. Handset sales fell 3% to 32.7 million units as Xiaomi cedes ground to rivals.
Hong Kong has struck a record landing despite months of violent speed progress. Plots above the high-speed rail station in Kowloon has gone to Sai Hong Kai for the equivalent of $5 billion. The site is expected to yield almost 300,000 square meters of floor area with offices, a luxury hotel and retail space. It's next to Hong Kong's tallest building, the International Commerce Centre.
India's debt-laden flag carrier will have to shut down if the latest attempt to find a buyer fails. Aviation Minister Hardeep Singh Puri told Parliament he's ready to solicit bids for Air India 18 months after an initial attempt to sell the carrier failed. Air India began as Tata Airlines in 1932 and later became state-owned. It hasn't made money since 2007 and is struggling with $11 billion of debt.
All right, so let's check.
do have the Bank of Korea policy decision on Friday, so do watch out for that. The ASX 200 still at a record high. Although I gotta say the Aussie dollar is under pressure. Kiwi stocks up 1.3%, rising for a fifth consecutive session. Let's now get the first board news with Sue Keenan. Sue.
All right, thank you very much. We're going to start with the UK. Sterling strengthened as a YouGov poll suggested the Conservative Party may win a comfortable majority in next month's UK election. The survey of 50,000 voters sees the Tories winning 359 seats to Labour's 211. However, a top aide to UK Prime Minister Boris Johnson is warning there could be a hung parliament. Dominic Cummings says there's a very real chance of no overall victory and that things are a lot tighter than they seem. To the U.S. now, the Fed's survey of the U.S. economy shows modest growth through mid-November with steady consumer spending and some bright spots in manufacturing. The Beige Book strikes a slightly more upbeat tone than it did in October and affirms the Fed's general outlook for moderate expansion. It says more regions reported growth this month than last, although the majority of the regions saw no growth at all. Traders in precious metals, meanwhile, are betting that gold could almost triple in the next 18 months and hit $4,000 an ounce. The options market in New York saw huge trades in the latest session, about $1.75 million in block trades with lots for an option giving the holder the right to buy gold at $4,000 in June 2021. Now, bullion has rallied 14% so far this year, but it's still about 24% below the latest all-time high. To Thailand, which is lowering its factory outlook for 2019, this is the trade war takes on an increasing toll. Manufacturing output is now expected to fall 3.8% year on year, and that compares to an original projection of flat growth at best. Factory production for 2020 is seen expanding at 2 to 3%, with trade tensions and the shutdown of 2 refineries sapping the manufacturing index. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, thanks very much, Sue. President Trump has signed legislation passed by Congress that backs pro-democracy supporters in Hong Kong. Now, this is a move that's seen as straining relations with China and complicating the remaining trade war negotiations. Joining us now for more from Hong Kong is David Zweig, Hong Kong University of Science and Technology Professor Emeritus. David, I just want to get your initial reaction to the signing of this bill and what is it going to mean for the US, China and Hong Kong?
Well, good morning. I guess my first response was this too shall pass, right? That I've said before on your channel that I think that this will not be a long-term problem. I think there's a short-term potential cost. China may decide not to slow down the talks for a little bit because they don't want to be seen by their own domestic political forces to be going ahead and cutting a deal at the same time that the United States is seen to be interfering in China's internal affairs. So probably will have a bit of a short-term impact. But in some ways, this is Trump's Thanksgiving gift to the democratic movement in Hong Kong, right? There's Thanksgiving here in Hong Kong already.
Now, of course, one of the provisions of this, well, it will soon be an act, is sanctions against any Chinese official that would seek to curb freedoms in Hong Kong. Now, if we can imagine a situation where the US was to sanction a Chinese individual, what would that mean? That would surely invite some retaliation, would it not?
Well, it'll be really hard to do it. People here in the U.S. consulate, I've been told, have this is a real headache for them to try and figure out what is going to be a violation of human rights. How are they going to decide that? I also think, what if you decide to retaliate? So what are you going to do? Freeze Carrie Lam's bank account in London? Stop her from coming to the United States? Maybe. But it won't be easy. I just don't, well, that would be my answer. I think it won't be easy to really retaliate against the Chinese government to punish people in Hong Kong for doing this.
Congress seems a little bit
And
more
let's hope
optimistic.
they don't need to do it. Let's hope that they don't need to do it, right? Let's hope that this whole thing moves forward. You know, we've had a peaceful election. You know, it's quiet on the street, though it may not stay that way. So let's just hope that this, you know, that none of this is necessary. But I'm not that optimistic.
Yeah, sure. We still have to see the review of the special trading status and so forth, right? But Congress seems to be a bit more optimistic about what they have done so far. Senator Marco Rubio releasing this statement saying that the U.S. now has new and meaningful tools to deter further influence and interference from Beijing into Hong Kong's internal affairs. Now, following last week's historic elections in Hong Kong that included record turnout, this new law could not be more timely in showing strong U.S. support for Hong Kongers' long-cherished freedoms. So, what sort of action?
Well, I think it'll help the street. You know, I think
Yeah.
it'll help the move, the democratic movement. It'll give them a boost at a time when, in fact, they just had a huge boost. So it may make them more assertive. I think the local councils.
Yeah, that would be my question.
Probably more assertive.
Would it embolden protesters as well? Does this mean that we could see more violence in the days ahead?
Well, that's certainly what China's going to say, and if there is more violence, China will definitely blame the United States for it. And then, to a certain extent, maybe they will be right this time, where the United States has not really been responsible at all for the anger that exists here in Hong Kong. But you know, you can't. We'll just see. Right now, everybody here is pretty hopeful, or at least hoping that the calm will be maintained, and that the focus will shift from the violence on the street to the local committees to be able to 17 of 18 local councils are now controlled by the Democratic movement, and they have a lot of ideas about how they're going to push forward, put pressure on the government. They've got money for the first time. The Democratic movement here has been quite poor. Every 107 out of 117, or out of 17 councils, all those councils, they all have now about $5 million US. There's all kinds of things that the election will lead to, or could lead to, that people actually never thought about, because these district councils are really seen to be of no significance. But everybody's got a buzz here about the fact that those district councils all of a sudden may really empower the movement. So this just comes on top of that.
So what will Beijing do next?
Well, I've been trying to figure out. You know, so far, if you look at Carrie Lam's press conference a few days ago, she looked like a woman. I mean, I don't think she's a lame duck. I think she's a dead duck. And I think that she has no play at all on this. I used to believe that she had a lot of play. She has no input on this. And I think that she's going to be tough. I don't think they're going to make any major concessions. That's the odds-on favorite would be, I'd say, about 70-30. About 70% would be my bet that they're just not going to make any serious concessions, and they're going to try and wait this out. The worry that Beijing has is that you've got legislative council elections in September, I think, coming up next year, and they don't want to. They've lost so badly here in this election. They certainly don't want to lose that election, at least certainly not as badly, so that there would be a majority of Democrats in the legislature. We're sort of moving up, right, from local councils to the legislature, and then the legislature, we then would move to the chief executive. But the legislature level, they don't want to lose control of that. So maybe they don't want to antagonize and empower the Democrats by doing anything too nasty. But I think that they will try and strengthen their control and their influence at the street level again, with the pro-Beijing forces here. They'll do that quietly. They'll pour more money in. They'll work on what we call the United Front with these pro-Beijing forces to try and prepare for the coming election, the next legislative election.
All right, Hong Kong University of Science and Technology Professor David Zweig, thanks so much for joining us.
Well,
now, for a close look at the market reaction to the new US law on Hong Kong, let's bring in Bloomberg MI strategist Mark Cranfield in Singapore. So, Mark, we have seen some movements in E-mini futures, also the yuan. What's this all going to mean for China markets?
Yeah, I mean, we've got the usual knee-jerk reactions that you would expect. Dollar against the offshore yuan has gone higher, dollar yen's gone lower, as you say. E-mini futures are lower, treasury futures are higher. That's the usual suspects you would expect to have the initial reaction. It's a little bit of a surprise to people that it's come on Thanksgiving Day, but anyway, yeah, gives them a chance to do a little bit of trading here when markets are a little bit thin. We haven't had the opening of China equity markets, but you can imagine they will open in the red. There will be a soft start for China because, of course, the Chinese side will probably want to show some response to what Donald Trump has said as well. At the moment, what we're probably going to get is limited reactions. It's certainly a negative, but it's not that people were completely unexpecting Donald Trump to sign this bill. What's more significant, of course, now is as we look ahead to December the 15th, we still have this threat that the United States would impose more tariffs on China on December the 15th. That's obviously tied to the negotiations that they're having on this so-called Phase 1 talks. So what happens now in that respect is it's becoming very, very important for people in financial markets because there seems to be something of an understanding that Donald Trump would be ready to push those further back if the Phase 1 talks are going ahead. But as your previous guest mentioned, there is a possibility that China would take this as a chance to delay those talks. So there's a lot of things up in the air, but certainly December the 15th is the big date now as far as traders are concerned in financial markets.
Our previous guest was also telling us that perhaps this could really embolden protesters across Hong Kong. We have, of course, seen the unrest continue for over 5 months now. This GTV chart on the Bloomberg showing us the impact this has had on the Hang Seng Index. The volatility, the daily swings have been huge. What will it do to the Hang Seng and Hong Kong stocks, which are already underperforming mainland markets?
Yeah, what we've seen also is this difference between the MSCI Hong Kong and the Hang Seng Index, because the MSCI Hong Kong is much more focused on companies that actually generate their revenues from Hong Kong itself, whereas the HSI, the Hang Seng, is more diversified. Some of that revenue comes from other markets as well, other countries. So we've seen a big underperformance by the MSCI Hong Kong in relation to the broader Hang Seng. And that's what you would expect to see a continuation of that if we do get protests coming back on the streets, because people will be nervous that the recession conditions you're seeing in Hong Kong could linger well into next year. There's already a report out I saw this morning saying that unemployment in Hong Kong could go to 5%, which is very high by Hong Kong standards if it was to reach that kind of level. So the impact on the local Hong Kong economy looks as though it could continue for some time. So anything which worries people about that will certainly hurt the Hong Kong companies that earn most of their income from the local market. That is definitely one place we would expect to see it. We also may see a steepening of the Hong Kong dollar rates curve as well. We've seen in previous periods where there's unrest in Hong Kong, we see the longer end of the yield curve steepen quite a bit.
Mark Cranfield, thank you, our Life strategist. And next hour on Bloomberg Market, the China Open, will get the views of prominent Hong Kong businessman Alan Zeman, chairman of the Lan Kwai Fong Group. And of course, we continue to reach out to voices on all sides of the debate about Hong Kong's future. Still ahead this hour, trade negotiators make a final pre-Thanksgiving push to get the USMCA over the finish line. We'll discuss the prospects. Plus, a major poll suggests Boris Johnson's Conservatives remain on course for a comfortable win in the UK election. We'll analyze the effects on sterling next. This is Bloomberg. after YouGov poll indicated that conservatives could win a healthy majority in next month's election. Bloomberg FX reporter David Finnerty is watching this, and David, we saw this spike in sterling against Aussie 10 currencies earlier after the poll was out, but we're seeing now those gains being pared back. Why?
Yeah, I think some of it is, again, the poll does indicate that Conservatives will win a majority of 68 seats, but even within that there is a
Fala, galera! Muito boa noite! Vai abrir aí o mercado asiático. Já já. Bom, estamos aí na operação, né? Estamos vendido aqui no Dow desde a abertura e comprado no ouro desde a abertura. Então nós temos um alvo aí. Nós temos um alvo aí no ouro, né? Era para ter vindo aqui, ó, no 59. Aí ele não veio nesse momento, né, das nossas operações. Então a gente vai passar esse alvo aí com a abertura do mercado asiático. A gente vai passar aqui para 162, tá? O alvo aí do ouro, 162, beleza? E mantém seu stop aqui, ó, aqui no seu ponto aqui no 14,52, beleza? E o Dow era para ter vindo aqui para esse ponto aqui de saída de gain, não veio, né? Então a gente vai arrastar um pouquinho mais para cá, ó. Então a saída vai ser aqui no 28,50, beleza? E aí o stop, pessoal, o stop no preço de entrada aí, tá? Estamos vendidos aqui desde a abertura e o gain aqui embaixo, beleza? Estamos aí já com $300, ó, nos dois. Abriu aí, mercado asiático, vamos ver aí. Dá para baixo, Mauro. Vai buscar 28 mil lá, tá? O alvo. E o ouro, 14,63. Beleza? Galera, eu vou nessa aí. Boa noite a todos. A gente se vê amanhã às 19h50. Ok? E amanhã, galera aí do Mini Índice Mini Dólar, a partir das 10 horas da manhã no canal do YouTube e às 8h40 na sala do Além. Valeu, pessoal. Muito boa noite. Muito obrigado aí a vocês. Segue a operação aí. Sucesso a todos. Valeu mesmo. Tchau, tchau. Boa noite.